If you don't believe it or don't get it, I don't have the time to try to convince you. Sorry. Now, that quotation is attributed to Satoshi Nakamoto, the founder of Bitcoin. Well, today we have the time, and we have someone unusually well placed to explain what's going on in the world of blockchain and cryptocurrencies. Not surprisingly, he's our youngest guest so far, a digital native. And when he visited me with his lovely dog a few weeks back to discuss his business, courtesy of a mutual contact, James Peterson. So, to talk about blockchain, the technology, its potential impact in the world of cryptocurrencies, I'm delighted to have the co founder of blockchain.com, the world's leading platform for digital assets. So, Nic Cary, welcome to the Money Maze podcast.
Thank you, Simon. So excited to be here today.
Well, Nic, a lot of this is new to me, and my research has only enlightened me to a certain degree, perhaps less than I hoped. So, the order of play today will be that we'll try and shine some light on blockchain, the technology. Well, that's you shining the light. Discuss cryptocurrencies, the future of cash, ESG issues, regulation, custody, crime, and possible government interventions. But let's just take a step back. I understand you're from Colorado and you're trilingual. Now, shine some light on that.
Yeah, so I was born and raised in Colorado. My mother is French, and my father spent the majority of his adult life down in Patagonia in South America. And so I grew up with a fairly global perspective. My mom was a civil servant, and my dad was an educator. And traveling was sort of something we were always doing. And I learned very early on some of the challenges that came with moving money around the world. And also, my grandfather worked as a broker in the stock market. And I was always watching him look at the papers and look at the little numbers the following day at what had happened in the markets. And I always was really quite curious what he was studying in all those things. So I think from an early age, I found an appreciation for how people think about money. And I think that's actually probably what drew me to the whole space eventually. I started as an entrepreneur. Actually, my first career was really as a teacher in India after graduating from university. And then I had an opportunity to join as a founding partner of a small technology startup. We built a customer relationship management application called Pipeline CRM. And I was the first employee there. I was paired with a developer, and I got to study firsthand how companies manage their sales processes. And when a CEO or a head of business development walks you through how they cultivate clients, how they think about taking care of their clients, and how they make money, you really get an exceptional diagnosis of how companies run. And so that experience was extremely formidable for me. And then in 2013, I had the opportunity to move to the UK, which I was able to do thanks to my French passport. That type of global mobility was extremely important for our early foundation as we were trying to pull talent together from around the world to concentrate on building blockchain.com. So I can pause there, but that's sort of the genesis of who I am.
Oh, well, Nic, thank you very much. You jumped slightly further than I want at this stage because as we had that conversation a few weeks back, you told me that at the age of 16, you were already buying and building and selling websites. So just tell me, what was that motivation?
Yeah, I think I've always had a bit of an entrepreneurial tickle. One of the first questions I love to ask everybody, and you're not, I won't be the only one getting questions today, is how did you earn your first buck? And so I'll answer that question, and then I'd like to hear you answer it. But I actually earned my first buck by clamming on the Long Island Sound. So I used to go out with my flippers and my mask, and I would unearth clams, and I would sell them to the neighbors that lived around my grandmother's house. And I was really obsessed with getting a boombox. When I was in the early 90s, getting a boombox as a young man was like a real status symbol. I wanted to be able to play music for my friends. And so that summer, I collected lots of clams. I sold lots of clams, and I was able to buy myself my first boombox. And that's how I basically began my career in entrepreneurship. I made flyers. They were quite lousy, but I earned enough money to achieve my goal. And that sort of, I think, triggered it. I ended up, as an early, growing up with the internet. I was fortunate enough to have parents that saw the value in getting a PC for the home. And I know this sounds silly today, but being able to play with that computer early on and watching the internet develop in front of my eyes, I was very curious to be able to creatively express myself. And one of the things we would do is build websites. There was a website called GeoCities, which was like an early MySpace or very early sort of almost Facebook type of platform where you could build a profile and you could put anything you wanted on that. Um, Using those skills, though, my best friend and I started a website business when we were 16, and we sold websites to all of our friends' parents that were professionals. They were lawyers. They had small restaurants, and they wanted to be able to find new clients with people searching on the internet. And that's where I sort of really learned the basics of everything from contract writing to negotiating. And boy, did I make some really silly deals. We did a deal with this sandwich maker where we built him a website that allowed people to order stuff online. And this was in like 1998. So this was way before Deliveroo or anything like that. And I think we were the only two people that used it to order stuff on the internet. But the deal we did with this guy was unlimited free sandwiches for the rest of our lives. And unfortunately, the company went out of business like 5 or 6 years after that. And we also moved on. So it wasn't a great business deal. But at the time, when you think with your stomach first, before you learn that there are other motivations in life, that was a pretty good deal.
Right. Well, thank you very much indeed. And not that anybody's really interested, but my first job was at Bristol Zoo. I come from Bristol, and it was cleaning loos and serving chips to the Welsh folks who came a lot. So there you go.
Well, see, but everyone starts off with learning how it all works and earning some income, and we all get better by practicing. And so I love hearing people's origin stories with that.
Right. Well, before we talk about your company that you founded in 2013, let's talk about the blockchain technology. I've struggled to explain succinctly to my family exactly what it is and how it works. So lay it out for me.
Okay. So there are now professionals and consultants all over the world that make their careers out of explaining what this capability or this new technology is pioneering. And so I kind of go back to the sort of original proposal, which was outlaid by Satoshi Nakamoto. It's important to actually start at the beginning in this case. In 2008, there was a pseudonymous web developer and cryptocurrency advocate who proposed a kind of novel solution to a very long-term computer science problem, which was how do you get a computer system, a database, to stay in a state of agreement if you distribute it widely? And so you usually have what's called a consensus mechanism, or maybe a governor that basically allocates decisions and then applies them downward to the network. So this person proposed sort of an innovative solution to that using a proof of work algorithm. And this is a body of computer science that had been developed almost the last 20 years. So in a lot of the most cutting technologies, it takes decades for these things to actually build up and become commercially applicable. And whether that's in rocket sciences or life sciences or financial technologies, it's sort of a law of nature. So long story short, the best way to think about a blockchain is basically like a big spreadsheet, an Excel spreadsheet, something we might use at work every single day, except instead of there being one copy, there are many copies, almost like there are many copies in the cloud. And all of these spreadsheets are staying in a constant state of agreement or consensus about what was written into them. And so what you have here is a record keeping system, almost like a large ledger of a history of all the things that had happened. And because the entire network has to agree about what's occurred simultaneously and almost instantly, you have essentially a global record keeping system to keep track of a state of truth. And what's going on with the Bitcoin blockchain, which was the first one, is it's basically just encoding a history of transactions. And it's actually quite simple in that way. All it does is record that something moved from one address to another, and it writes that into the database, and then it distributes that globally around the world. So the best way to think about it, and from my perspective, is a big spreadsheet in the cloud that can encode precious information. And once it's written into that ledger, it can't be erased or modified. And so you've got a track record of things that have occurred with a high degree of certainty.
Okay. And so the next question must be, does it? And if so, why does it change the way things are done for business and other activities?
Okay. So one of the big challenges we've had, especially in the digital world, is corruptibility of data, and the other one is the replication of information. So Simon, if I take a picture of you skiing in the Alps, and then you share that photo with your son, and he shares it with your mom, you now have multiple copies of this digital thing that happened. And it's very difficult to ascertain provenance, and you don't know which one's the original. And so we've had this sort of data replication issue for a very long time, and it's made it very challenging to develop property rights in the digital era. What's pretty novel about the innovation of the blockchain is that we now have an immutable record keeping system that you can record any type of property right into. It starts off with digital property rights, but we can begin to extrapolate that back into the atomic world. And so now, if you have basically a global, worldwide fabric that wraps itself around the internet and is natively integrated into it, you can pioneer all kinds of interesting applications of that. The first application, though, as envisioned by the inventor of the Bitcoin network, was electronic peer to peer cash. And that was sort of like step one. Let's see if we can build money for the internet. And if we can do that, maybe we can unlock other innovations. And that's basically what's been happening for the past decade is a lot of companies have been focused on basically testing out these capabilities and adding to them. So I won't go into all of it immediately because I'll be curious to see how you want to learn about this. But the Bitcoin network was the first one. It sort of basically outlaid a new format for how to develop money for the internet. Then there's a whole bunch of things that have happened since then. There are now thousands of blockchain based asset protocols, precious information sharing systems, and much more that are being developed. And all of them are tinkering with some of the basic principles that the original blockchain built by Satoshi Nakamoto and then refactored and built on by many other open source developers. There are now many, many different projects that are all simultaneously trying to find product market fit.
All right. So we're going to come to cryptos specifically a little later on. But in 2013, you co-found blockchain.com, and just for the record, you have you are now the world's leading platform for digital assets, and I see your financiers have been from more strategic ventures, Google Ventures, Lakestar, Richard Branson, Bailey Gifford. I think recently placed 100 million with you in a refinancing or a financing. So why did you start the company?
Okay, so all companies have, I think, sort of interesting origin stories, and then they develop into something much bigger. So, blockchain.com was actually started by a British developer and my friend, and I moved here to work on it with him. He was basically doing it all by himself, and the original project was called blockchain.info. Now, blockchain.info and blockchain.com are synonymous, but in the beginning, we were just interested in basically building a search engine for looking at that blockchain. We wanted to build tools that would enable regular people to study what was happening on this large transactional network. So the blockchain being this big spreadsheet in the cloud that's keeping track of all these transactions that are happening with a high degree of transparency. So we built tools that let you look at that and say, well, how many people are using it? How many transactions occurred in the last day, over the last week, over the last month? Is it speeding up? What's the distribution of value in this network? And the one thing that all of the original founders of the company had was a mutual interest in statistics. And my background in building technology companies, an interest in digital money, and then also in sort of the geopolitical implications of basically building a new form of money, an alternative financial system that would be natively integrated to the internet, caused me to become incredibly vocational about the work almost instantly. And so I moved to the UK in 2013 to join with my British business partner, and we started building all kinds of tools and capabilities for the firm. And then in 2014, that's really where we sort of put on our first muscle, and we raised our first round of financing, and that was a Series A. We went on to raise a Series B a few years later with support from all of our internal investors, and then bringing along investors like Google Ventures. And then in our Series C, you saw some of these macro crossover firms and large institutions also start to allocate into our company. And so blockchain.com today is now one of the world's leading crypto finance houses. And we sort of have two pieces of our business. We've got retail features that include a brokerage service. We have a full cryptocurrency exchange, allows people to buy and sell at volume. And then we have that data platform, which is really where it all started. And then we also have a sophisticated global institutional markets business providing lending, custody, trading and bespoke structured deals for institutions. So all of that's packaged together. And just yesterday, we passed the 75 million user mark on signups. So it's quite an exciting thing to be sharing. It's been a long road, and we still feel like we're kind of in the early innings of all of this, despite the success that we've had to date. We are just barely scratching the surface, ultimately, of helping people reimagine their relationship with money. And so I'd love to spend a little more time talking a bit about that, because I do think it's worth digging into really what money is and the different ways that humans have evolved their understanding of money in the history of time, because we have to face the reality of the type of economy we're participating in, and we need to have money that matches the needs of that era. And so I know that you're a gold bug because we talked a little bit about that. But I actually think there's a lot of reasons why people that are interested in hard money should at least study cryptocurrency and then form their own views on it. But there's a good starting point there to probably dig in a little bit.
So we're definitely going to talk about that. So I'm just going to hold you there because just staying with your company, you've I think had nearly a third of all Bitcoin transactions since you were established, and I think that you have some extraordinary number. Like I read, 65 million blockchain.com wallets. Just help me, and just help our listeners understand what do you mean. What is a blockchain.com wallet?
Okay, so our company name frequently gets confused with that core technology that a lot of people are excited about. Sometimes that happens in tech companies. If you remember, Microsoft actually stands for small software, and Facebook was actually a whole bunch of people's pictures of faces put on the internet. In our case, we named our company after what we thought was the clever innovation, and then the word also became the mean, kind of an entire technology group. So blockchain.com is a software business. We build a platform that allows institutions and regular consumers to gain access to this new financial system. And the best way to think about it really is we have an iOS or Android or web wallet that you can sign up for. Anyone in the world can create a wallet with us, and that acts basically as your passport to all kinds of new financial services. You can send, receive, secure, trade, exchange, store, and custody digital forms of money, including just pounds, dollars, or cryptocurrencies like Bitcoin, Ethereum, and many more. And so, because we've been involved in this industry since the very beginning, we have a lot of the early vintages of users. And we also have a lot of the new ones that are discovering crypto for the first time. And just like any industry has waves where there's greater adoption that occurs over certain periods of time, the same is true in our industry. The economy at a macro level has eras where there's a lot of growth and then contraction. That also happens in cryptocurrency land, but the swings are very, very tight and they happen extraordinarily quickly. And so we've actually been through about 5 of these, what I would describe adoption waves, and we are arguably in a break in the wave set this year. 2021 has been an extraordinary year for digital currency and digital assets generally. And I think we're probably still kind of in the middle of this newer adoption curve.
And you've mentioned Bitcoin and Ethereum, and we know that there are a number of other protocols. But how should we think about the key protocols in terms of what I really mean is the basic description and utility of the key top 3, for example?
Okay, so as we've mentioned, there are now thousands of different digital currencies or cryptocurrencies. The one that's most well known and the oldest is the Bitcoin network, which still has about 65% of total market share in all digital assets. So it has a lot of brand recognition. It's deeply integrated into most of the original and newer service providers that are building tools for everything from institutions to businesses to retail customers. And Bitcoin is very specific in its use case. It has basically developed into an inflation hedge and a form of digital gold. And it was also working on being a peer-to-peer electronic form of cash. To date, that has not really been implemented at wide scale. There are a bunch of debates about why that is or not. But so far, primarily being used as a store of value for people that see it as a form of digital gold, and potentially for other reasons like an inflation hedge, which we can get into later. So that's sort of the prominent digital currency today. One that's certainly inspired a lot of interest over the past 5 years is the Ethereum protocol. Ethereum network is a bit more ambitious in its total set of use cases. And you may have heard people talk about things like smart contracts. If you think about a basic payment where I send you £10, Simon, because I lost a bet about who would win the Arsenal game, we sort of have an agreement, right? There was a bet, I lose the bet, and I send you some money. And that's pretty simple. A smart contract is a bit more sophisticated. In fact, it can be incredibly creative and have hundreds of variables all interacting with each other and then causing a set of a value to be distributed against an agreement. And so the ambition of the Ethereum protocol is far greater in some ways than just an electronic payment. It includes an electronic agreement that executes over a worldwide computer that is also attached to one of these ledger systems. So imagine a world where we come up with a far more elaborate, agreement where maybe you and I form some sort of digital company, and that digital company sells some goods on the internet. And anytime a payment is made to that company, a dividend is automatically paid out to all the shareholders of the operation. That's the kind of agreement you could create on the Ethereum protocol. And that's actually quite a basic one. There are far more sophisticated things being developed on that. And then there are dozens and dozens of other interesting use cases where you have fit to purpose technologies that are very high throughput, but only do one specific type of transaction, meaning they maybe only support a social media platform. There's an interesting one now called Clout, which is basically a decentralized Twitter, where the content creators are actually rewarded for the amount of attention they get by newly minted digital currency. So instead of advertisers being compensated in this world, the content creators are compensated for developing great content. So there's some really innovative new business models that align the value that the users are creating in these networks with essentially sort of a distributed social currency or bank that is minting that value out to the people that are creating content on them. Those are some examples. That there are you can visit websites like blockchain.com or CoinMarketCap or CoinGecko that show the top assets, and they do move around quite a bit. And I will certainly not sugarcoat it. There's an extraordinary amount of volatility in some of these assets because there's a lot of speculation, and there are arguably different levels of adoption. And so sometimes what are called the tokenomics are incredibly important to understand, because the way these systems basically mint new assets and distribute them, it's extremely different. So it's worth spending a little time talking a bit about that, because there's a good reason why the Bitcoin network has found strong fit as a store of value, whereas others have struggled. And in the Bitcoin protocol, the original network was encoded with some fixed variables. And this is where we get into the monetary policy of these networks. And so in the case of Bitcoin, when the original network was composed and launched and distributed globally as a form of open source software, there were some rules that were embedded in it. And the only way to change those rules would be to take over the entire network, which would be extraordinarily difficult to achieve today. And I can talk a bit about the risk factors. But anyway, the key variables were that number one, the total amount of digital currency would be fixed, and there would be a limited supply. And so in the case of Bitcoin, there will only ever be 21 million units of Bitcoin ever minted by this network and distributed to the validators, which perform important work on the network. And I'll explain that in a second. So you've got a fixed variable, 21 million. Now, because this system is based on the rules of mathematics, they also embedded some other useful tools in here. And one of them was that there would be divisibility of these units. So just like a pound can be divided into pence, a dollar into pennies, one Bitcoin can be divided into 8 decimal points. And the smallest unit of account is called a Satoshi. So 21 million by 8 decimal points creates quadrillion units of account. So you have a lot of different units of account for this system, which is sufficient for now to perform a high degree of commerce globally. So How does this network work? Well, if you think this is interesting, then you can download the open source software for Bitcoin and literally run it on your computer. And by doing so, you are helping support the security of the network, and you are helping keep track of one copy of the blockchain. And so your computer is then burning energy to do this. And as a reward for keeping track of this transactional history of everyone's value, you are occasionally rewarded with newly minted Bitcoins. So a central bank like the Federal Reserve or the Bank of England prints money based on a commission or a reserve board or something like that at the direction of Congress or sometimes in emergency measures. And there's a whole process for how money flushes into the economy. In the digital currency space, the network itself has basically variables that determine how much money is either going to flush into the system. And there are varying ways of accommodating for that. In the Bitcoin case, there were only ever going to be 21, and new coins are minted every 10 minutes. And they go out to one of the Bitcoin miners, which can be anyone in the world, but now are primarily run by companies because there's so much value being minted that they've specialized very significantly. And every 4 years, the total supply actually decreases by 50%. This is a very important concept because in its design, Bitcoin has a deflationary currency schedule. So there is less and less and less of this currency coming into circulation every 4 years. And that arc will at some point cease. And it's predicted to be in the year 2144 or something like that. So I'm sure this will create a lot of questions. So I'll pause because it's important to understand what's happening.
Yes. So look, as we assess cryptocurrencies, some of the world's great investors, Alan Howard, Paul Tudor Jones, Stan Druckenmiller, have all become, or at some point, owned Bitcoin or some of the other variables. And it was Stan Druckenmiller who said that crypto was a solution in search of a problem. I guess my question is, what problem does it solve?
This is a great question. Okay, so let's talk a little bit about money. I think we're on the money podcast here, so this is the whole point. So most people spend their whole lives in pursuit of money to a certain degree. They want to get money so that they can invest in their family, so that they can maybe acquire things like a house or food for themselves, or maybe so that they can have experiences and go on holidays and things like that. But I believe that most people really don't have a strong understanding of why money has value. And this is pretty interesting because money is an old construct. It predates human writing. It's a prehistoric concept for humans. And we know this because we have found different artifacts in burial sites. We have found seashells that come from thousands of miles away from other places because human beings have tried different forms of money over our history. And so we used to live in caves. We invented the wheel. We paved roads. So we have created new forms of money to match an ever I'd say advancing economy. But we've also made some pretty terrible mistakes. And one of the reasons is we've been experiencing essentially a technological inadequacy because we haven't been able to develop a sufficiently incorruptible language for money, which has caused all kinds of externalities. So I'll be specific here. We used to trade seashells, but we don't use those anymore because they're corruptible. There's a ton of them. They aren't rare. They don't have properties that really lend themselves to be a medium of exchange or a sufficient store of value. We used to use cigarettes in World War II. You could bribe border guards. You could settle debts with your squad mates. We tried gold coins, and those worked for a pretty long time. Gold has a bunch of properties that make it a very interesting store of value and medium of exchange, which is why many empires relied on gold, sought gold to fill their coffers up and to expand their operations. Gold is rare, it's fungible, it's divisible, it has a limited and fixed supply, it's challenging to obtain, it's durable, but I would argue it's expensive to store. It's challenging to use in regular transactions to pay for things. And so we started to tokenize gold, and we used paper money that would at one point in time reflect a claim on a specific amount of gold. And then, as we're aware, we broke the gold standards and we've been using an ever inflating amount of fiat currency now for a few decades. And so we're experiencing some interesting, what I would describe externalities and arguably negative externalities due to this. Now, there are good reasons that can be argued by economists for why you would develop an inflationary currency. Maybe you want a credit based economy because it allows people to get over their ski tips a little bit, buy stuff, and then pay for it later. And you have sort of a retail driven consumer economy that kind of grows for growth's sake. That kind of works okay potentially, except you also get extraordinary amounts of debt. You develop completely unsustainable, economic practices, and we're just now seeing the types of bubbles in almost every asset class, and now inflation. And so let's think a little bit about what we would want to have as a form of money if we could go back to sort of ground zero. Like let's observe the world we're living in today. And I think we can start off by saying, right now you're in a different country from me, and we are having a private conversation using digital capabilities that allow us to beam precious and interesting information to each other instantly over the internet. And especially over the last 18 months, in the context of a global pandemic, the need for many businesses to find new and innovative ways of working together in a world where trends toward digital are actually accelerating, it seems plausible to me that digital money would play an interesting role in some sort of future where more and more and more worldwide commerce is occurring globally on a digital means. And so there are a few other trends happening here. If we look at the tech companies over the last 10 years, they have far outpaced growth in the stock market against atomic industries. That's projected to accelerate. So by 2030, it's our thesis and one that's shared by some of our investors, and also it seems to be coming quite true, is that the internet itself will be the largest contributor globally to GDP. And so we want to build a financial system that's natively integrated to the internet so that people can seamlessly and instantly exchange wealth. And if we think back to what money is, again, money is just a social construct that enables people to exchange wealth. And we build different mechanisms for that. One of them was the modern financial system, or what I like to call TradFi, or traditional finance. Pioneered by the Medici family, you've got a bank. The bank has a ledger. The bank keeps track of that ledger and charges you rent for storing your value with them. Extrapolate that against all the different countries and all the systems that then need to negotiate, where everyone's checking each other's work to make sure that if you move money from Italy to Sardinia to Paris to London to New York, that those transactions are being encoded correctly in a variety of separate ledgers. Then you have this incredibly expensive, very brittle system that also relies on a very flawed model for bringing new value into it, which is the modern money engine. And we can talk a bit about how that works. But when the Federal Reserve or the Bank of England or the ECB coordinate global policy response to things like a pandemic, they tinker with the economics of our entire system. And so there are a bunch of arguments for why some cryptos, or specifically hard asset cryptos, are a response to this, but also tooling themselves for a world where we're all going to be operating predominantly over the internet. And so some of the benefits are anyone in the world can sign up for these systems. So basically, regardless of the circumstances of your birth, if you care about financial inclusion and you want to bring billions of people into the economic influence of the internet, then cryptocurrencies are a good way to increase the number of people that can participate in the economy. That's a big deal. The second, I would argue, is just simple transaction fees. Today, every time you swipe a credit card or even just store your money in a bank, you are losing value. The reason for that is because of negative interest rates. Even storing cash in your bank account isn't wise at the moment. But if you use a credit card or a debit card, every time you do that, you're paying Visa or MasterCard fees for doing so. It'd be nice if you didn't have to do that and the settlement happened with certainty almost instantly. That's true in cryptocurrency. And so it makes it faster for people to basically engage in commerce anywhere in the world. And then lastly, you have a completely different set of fundamentals that govern the economics of the system. One based on mathematics with predictability, and an inflation schedule or a deflationary schedule that is highly transparent, and there's no coercion going on, or corruption in the currency supplies. There are other arguments to make too, but those are some of the ones that are inspiring new thinking, especially among, I would call, traditional financial professionals around what they're actually seeing in these protocols.
So Nick, you actually encapsulated the argument for gold very well. I might, I have to say, there is always a debate around it, but the scarcity, not uniquely to gold, but the scarcity of time and money creation, is important. We all have read the histories of the Weimar Republic and Zimbabwe and others, and there's I would say, a dangerous comfort that this money creation that we've seen since the great financial crisis, and actually slightly predating that, is all going to be controllable by central banks, because they are, if not omnipotent, they're omniscient, and they can manage it, and we'll see. But whilst gold is very clear in its limited supply, there are now over 5,000 cryptocurrencies. So how should we think about reconciling scarcity whilst there's proliferation?
Yeah, this is a good point. So just like gold is a very valuable mineral because of its properties, there are other minerals too. There's silver, there's lead, there's copper, and all kinds of stuff. In cryptocurrency land, there's a lot of different projects, and I would argue a lot of them are not worth very much or anything at all. And partially it's because of their security design, and it's also partially because of the total human contribution that is going into it. And so Bitcoin benefits from an enormous amount of support from open source programmers and developers that curate, cultivate, and improve this technological transactional fabric for the internet. It's scaling up as more and more users find it useful, and keeping up with that maintenance is a big deal. And so what we're experiencing now is network effect money. It's merging features from the atomic world, aka gold, blending them with technological capabilities, and then adding on top of that social norms and network effects. And so you're basically combining things that we have in our history found useful with capabilities that we've only recently unlocked. And so if you could have gold that would enable you to beam it and teleport it anywhere in the world instantly, basically for free, you would probably use that as a form of money. But we don't have a good way of doing that because gold is difficult to store. It's hard to trade with. If you want to send it from somewhere to somewhere else, you got to get guys in a big truck and guns to protect it on its journey. So we don't have an effective way of basically using gold as a form of money today. But if you were to give it capabilities, that's one of the things that the Bitcoin network has really nailed. The other networks, though, are trying to do a whole bunch of other things, especially in a world of essentially totally permissionless creativity. You have some really wild ideas. And so the example of the social network that has essentially decentralized itself and is now running, there's no CEO of clout like there is a CEO of Twitter. And so if you think it's important for the internet to have a resilient forum where people can debate and discuss ideas without fear of censorship, then maybe using that type of platform would be useful to you. If you're an up and coming musician or artist, and you don't want the majority of your future royalties going to some agent or a large music house, there are now property right programs where you actually load up the content that you create, your music, your writing, your art, anything, and you are instantly rewarded for the views that people give you on your content instead of having to go through these centralized old rent-seeking systems. So there's some very powerful market forces that are aligning with these networks and are enabling totally new forms of value creation that wouldn't have been possible 10 or 15 years ago.
So, while I understand your argument for the legitimization of these cryptocurrencies, do you worry about the volatility and that simply one tweet from Elon Musk can send gyrations through any number of these currencies, most particularly Bitcoin.
Yeah, so I do worry about the volatility because unfortunately, humans have some native features in them that make them vulnerable to, I would argue, their worst natures. And so, if you hear about an opportunity that sounds too good to be true, many people get involved or ensnarled in risk in ways that they shouldn't because they didn't do their homework. So, in cryptocurrency land, what happens today is someone can basically launch a new digital currency, and they can call it future coin or something like that. And if they find a venue to list it on, then people can buy and sell it. Now, if you were looking at the price of Bitcoin and you could say, well, that's really expensive today, maybe I'll buy this future coin that is only pennies. I might buy some of that. But what you wouldn't realize as a retail consumer is that that network has no support from any developers, programmers, or a network of individuals maintaining verification nodes and all these things. So you would essentially be falling for a trap of a kind. And so, for that reason, I think it's a little worrisome. But um, just like the first people that took a bet on Apple or Facebook or some of these other any company, really, you have a view, and if that view is right, then you're compensated and rewarded for it. And that's been true in the cryptocurrency space. There are many early users and early investors in this industry that have made a lot of money, but a lot of them also recycled that money into building companies, just like we did, into investing in an ecology of services and support. And because we have a long term perspective on tooling the internet with a way for anyone in the world to transfer value with one another. And that's basically what we're still working towards. And like I said, based on what's publicly available, there's somewhere between 150 to 200 million holders of cryptocurrency in the world today. So that's still a very small percentage of the worldwide population. We have a long way to go to increase the adoption of these capabilities and these assets. So, in short, no one should ever invest in things they don't understand and they didn't do their homework in. And in cryptocurrency land, just like in the penny or pink slip stock market, there's lots of scams. There are a lot of bad actors. And then, if you're going to be serious about studying this space, you need to look at companies that are reputable, that have long track records of operating, that have strong governance structures, and that do a good job with customer support. And it's pretty easy to do that if you put the time in.
So this adoption and will require, of course, greater institutional support, and the institutional universe will have very clear requirements around due diligence. So just explain to me what's going on in terms of the infrastructure, custody and due diligence, and therefore the ability for institutions to get comfortable.
Yeah, this has been probably the most important thing that's been happening in 2021 that is least reported on, but also because the institutions are the sort of slowest to move in this case. And so when we talk about institutions, we're talking about crossover funds, pension systems, sovereign wealth, even countries looking at how to adopt digital currencies, central bank digital currencies, or crypto assets as part of their balance sheet compositions. And behind the scenes, a lot is going on. But there's an interesting dynamic, which is for the first time in the modern economy, the institutions are sort of the last ones to take a bite at this apple. Now, they're still circulating this orchard because there is so much going on in it. So there are a couple things to break down here. One is certainly on the counterparty side, the insurance side, and the custody bit. When institutions allocate funds, they are putting on a risk management hat that does not give them any leeway on the volatility or the risk. And so, ensuring cryptocurrency has been one of the more challenging elements to navigate. And there are regulated financial products that are being developed now for institutions that have all the same wrapping as the types of instruments that these institutions are used to investing in. So the type of governance they're expecting, the type of regulatory disclosures that they're expecting, regular reporting on these things. And we're already seeing everybody from Goldman Sachs now offering digital currency products to their private wealth clients, to finally JP Morgan, who has been dramatically opposed and incredibly critical of digital currencies, coming out and saying they are building sales services for digital assets. Fidelity has done so. And so these are just a few of them. But what's going on in the background is that almost everyone is developing their strategy here. Some are partnering, some are acquiring, and some are building their own capabilities. And when they do that, they have to start at the very bottom, which is custody, security, then transactional capability, liquidity, provisioning, and all those other market infrastructure features that are necessary to offer oftentimes either bespoke or the highest margin offerings to their clients. It'd be worth mentioning too, though, that for the first time this year, we've seen a sovereign nation actually adopt at least Bitcoin as a legal form of tender, which is extraordinarily interesting. So El Salvador this year, in their parliament and then passed by their president, actually made it a national regulatory obligation for people to accept Bitcoin as an asset for any debt. And so it is now legal tender in El Salvador, and you are required to accept it, which is a very interesting development. We're not sure if we'll see more countries follow that path, but you've got institutions, countries, and now major corporations holding crypto on their balance sheet just as part of a broader risk management and balance sheet management strategy. And those companies are big ones. So Tesla, SpaceX, Michael Saylor's company are all holding large positions in crypto. And for every company, by the way, that publicly says they're doing this, there are probably 10 that are not publicly disclosing their positions. And an interesting fact that I learned last year that was particularly interesting was that 23.6% of all US dollars ever created in the history of the United States were printed in the past 18 months. And so when you start to hear the rumblings about what the inflation schedule is, and especially when the large the agencies that are reporting on that, I'm getting a little curious, because to me the real inflation schedule is the increase in the monetary supply, not what they talk about. And so I'm particularly concerned about that. And because at the end of the day, regular people don't understand that the money that they hold in their bank accounts is no longer helping them earn wealth or protect their savings or their wealth. And that force alone is dramatically concerning. And we're not out of the woods in terms of the historical context of our era. There's still a lot of geopolitical instability. The health crisis is far from over. We have midterm elections in the United States, a presidential transition in France. You've got a new leader coming into Germany. And there has still been no major, I would say, accountability on this whole pandemic around what has really happened, and what and who knew what when. And I think there's still some big consequences to shake out from all that.
Yeah, well, there's a whole separate podcast on the loss of purchasing power of these major currencies. I think the numbers I most recently saw was over the last 100 years, the US dollar has lost 99% of its purchasing power. But just staying with regulation, SEC Chairman Gary Gensler announced a few months ago that the SEC will come up with a regulatory framework for crypto next year. Is that what's really needed to give the stamp of approval?
So the answer there is it kind of depends. We're still waiting to see what type of regulatory approval that and what that means. I think it's concerning when politicians pick winners and losers in markets. And so generally, especially when they're regulating things they don't really understand, whether it's female health issues or digital currencies or weapon systems or agricultural, processes, we should err on the side of innovation and make sure that our politicians are very, very well informed on the work that they're governing on. Most recently, this past weekend, the U.S. infrastructure bill in Washington, D.C. was literally held up over specifically crypto amendments. And that is a pretty wild change of events if you really consider what that means. The largest infrastructure package in the history of the United States was being held up because of disagreements on how to cultivate, nurture, and continue to invest in financial innovation while trying to mitigate some of the concerns and risks that are very valid to protect consumers from the things that we want to protect them from, whether that's fraud or financial crime. And my view is we need to continue to educate our policymakers who still frequently were born in an era where they didn't necessarily actually grow up with the technologies, but are starting to regulate them. And that has a lot of adverse consequences because if the United States scares away the financial innovation happening in this sector, it will go abroad and it will innovate somewhere else. We've got sort of one chance here, from my perspective, to tool a better form of money. That's in everybody's interest. If it's easier for people to trade and exchange wealth, we will experience greater prosperity. We will build better tools. We will build life-saving innovations, and we will raise the standard of living for everyone that peacefully engages in commerce. But if we make commerce more difficult, if we continue to exclude people from participating in the economy, and we don't innovate our form of money to make it better for the age of the internet, then we will have adverse consequences. And it's difficult to predict what all those would be. But in an era where we're printing too much money, inflation is apparently being underreported for sure. I'm pretty concerned about that.
So just staying with the future of money, I was intrigued because a few months back we had Clive Vacher, who is the CEO of De La Rue. They print banknotes around the world, and he was making the observation that you have over 2 billion people who are unbanked in the world, and that actually the death of the banknote is way too premature in people's mind. What's your view of money in 10 years' time?
Oh, so partially this is a generational thing. I like to collect coins when I was a kid, and then I like to collect, game cards, and then I like to collect virtual tokens as well. And so I do think that cash, as we know it today, will cease to exist within the next 10 to 15 to 20 years. I don't know if it'll be gone within 10 years. It's certainly being phased out in the most advanced economies today for a variety of reasons. One, it's a pain in the butt to mint. It's actually quite dirty, and in an era of a health crisis, having people handling and moving money and transmitting viruses is not clever. And then on top of that, governments have a serious interest in surveilling economic activity. And so putting that aside, because I think there are other risks with having a surveilled form of money, because I think there are strong reasons why people should have privacy in their economic transactions. There's a lot of trend toward digital contactless payments, et cetera. So most young adults won't ever probably handle cash by the end of the next decade. And so it'll take a little while to phase itself out in that way. You can expect cash to still be prevalent, I think, especially in emerging markets where people just have no trust in their institutions whatsoever. So what's interesting in those markets, though, is you also see the lack of trust in institutions has led to faster adoption of digital forms of payments and money. So in Kenya, in Nigeria, the use of digital payments far exceeds the use of cash transactions now, and that occurred very, very quickly. So we'll see. I don't think you'll see much cash. I think it'll be collector's items. People will look fondly on the faces of old, bygone leaders, and they'll go, "That was so funny that you guys used to kill trees and print pictures of old, political figures, and you couldn't even, send that money over the internet. Like that doesn't make any sense. Why do you guys use those things? And also, why did you guys print so much of this stuff? It became worthless. That was pretty foolish of you." And then we'll be like, "Yeah, we should have known better. We didn't follow our own history."
No, look, I get it. I think the answer is time frame, and I think like we all thought tobacco companies might sort of disappear, and they proved to be much more permanent. Maybe just a longer journey for a world of seven and whatever it is, 7.5 billion people. But Talking about your company, blockchain.com, it is clearly in a very central position to the growth of this market. How would you like to see it develop over the next decade?
Yeah. So, Simon, there are two things that I'm really concentrated on. We want to build an alternative financial system for the internet that empowers anyone in the world to control their money so that basically we can wrap the planet in an economic capability that enables people to send, receive, secure, trade, and exchange digital forms of wealth. And if we can get a billion people doing that, I know that I will have left this world in a slightly better place than I inherited it. And I honestly feel that, especially the younger generations, are facing off against institutions and momentum in an economy that isn't really in their favor. If you do the things you were said you were supposed to do, get a job, go to college, pay for everything, take on the debt you need to get that degree, go into work for some large corporation, save more money than you earn. If you do those things today, you are horrifically in debt. Your savings are actually being devalued by an economic system that is extracting your value over the long term. And you are not preparing for an economy that is going to become vastly more global, vastly more digital. And this remote work first thing that everyone's so excited about actually means hire anywhere. And so there's huge structural changes occurring in the macro economy all simultaneously. And being able to adapt to that is extraordinarily important. And so, in short, the mission at blockchain.com is to facilitate a world where anyone can have better control over the tools they use to manage their wealth and exchange that wealth with anybody else they want to. The other thing I'm passionate about, though, is supporting entrepreneurship. Basically, we're going to need a way more diverse generation of wealth creators than we've ever had to build the tools and the services and to clothe and feed us. And so the two things I'm concentrated on in my career are one, reinventing people's relationship with money. And at blockchain.com, we have a really strong shot at building what I would describe as a world changing company to enable more people to have control over their wealth. And then I concentrate a lot on entrepreneurship initiatives so that we can get more young adults practicing building companies, earning wealth as opposed to being wage employees, and hopefully building the companies that'll navigate the challenges of the future. And all the big challenges we do have are also incredible opportunities for the next generation to work on climate change issues, to work on racial inequality issues, to work on access to financial services, financial literacy, and political reform too. We have a significant lack of leadership in the world, and governance in a lot of ways I think is not representing the speed of technological change. And we need more leaders in the world that are tooled in the language and vocabulary of this technological inadequacy that we're sort of facing off against.
So let's talk about crime. In May of this year, the FT had a very interesting article, The Rise of the Crypto Laundries. I quote, the ability to hold cryptocurrencies without divulging your identity has made them increasingly attractive to criminals, particularly to hackers who demand ransoms. And last year, at least 350 million was paid out to hacker gangs. Now, what I don't understand is that since I thought each step was discoverable through the blockchain ledger, how come we've got this ability for criminals to hide?
So every single time a transaction is made on a digital currency network, that transaction is written into a blockchain and is publicly studyable. Now, when an illicit actor, let's say a hacker in a country like North Korea, which has now been studied by many cyber criminal firms to be very active in stealing people's digital currencies, that transaction is publicly viewable. We know that it happened, and we can see that it has gone to a destination address that is associated with fraud or criminal activity. And so these addresses get tagged. Now, once money is stolen, it is extraordinarily difficult to get back unless those bad actors try to move those funds through a custodial exchange. So earlier this year, someone held ransom one of the oil pipelines in the United States. They paid a fee, a ransom, to unlock access to their backend servers. And when those guys tried to cash out, the FBI was able to seize those funds and prevent them from basically pulling the money back into what I would call the atomic economy. So we've got sort of a dual challenge, which is yes, there's a high degree of transparency. So when bad things happen, we can actually monitor them and we can trace the flow of funds, but we can't necessarily catch the bad actors if they're in one jurisdictions that are not receptive to Western, especially Western law enforcement um, initiatives, or two, if they're keeping things digitally, it's very, very difficult to track them down because they're not going into a venue where we can attach an identity to them or freeze their funds. And so, uh, just like in the normal economy, bad guys use cash to perform all kinds of illicit activity, and then HSBC, I think last year paid record fines for money laundering moving through their systems. It's not necessarily explicitly the system's design or flaws that are the fault here. It's also how you police it. And so there are now many major compliance firms that do nothing but concentrate on tracking these stolen illicit funds, and they sit and wait patiently until the bad actors move those funds into a venue where we can then coordinate, an enforcement action against that venue. But if those venues are in places like North Korea, um, it's extraordinarily difficult to enforce against.
Okay. So Neil Ferguson, the professor who was, who you know and I know, and he was on our show last year, and obviously wrote The Ascent of Money, made the observation back on this podcast that for him Bitcoin was an option on digital gold. But I had an exchange with him a couple of weeks ago, and his question was, "What's the government regulation you most fear?"
And I think he's right about that, by the way. So Bitcoin is the sort of first one to pioneer a whole bunch of new concepts, vocabulary, technological innovation in the blockchain. And it wrote a bunch of assumptions, meaning the currency supply, the inflation schedule, the use of proof of work as a mining algorithm to distribute newly minted coins. And so far, that's proven to find a certain product market fit. Is it possible that there's some 15, 16-year-old savant in, I don't know, France or Nigeria or somewhere else that's dreaming up some new system that has better capabilities, more transactional throughput, can distribute itself more globally and use less energy to provide the same degree of computational security? It's very possible. And when that happens, it's possible too that the social brain trust of one of these networks will adopt something else even more quickly. And so I don't think we should be afraid of innovation or changes. And Neil's not incorrect in saying that it's possible that an even better form of digital currency will come along. I think it's actually inevitable. In terms of a regulation or one thing that would probably be most damaging, um, in terms of government enforcement, it's been a decade since the first network launched. And in that decade, we've seen every sort of attack thrown at these networks, whether it was financial regulation, intrusion by foreign actors, competition, and they're quite resilient by design. I don't think it's very feasible for a government to actually make these things illegal, but censorship on a grand scale would be concerning. And we already see what that looks like in China. The only way you can turn off cryptocurrency is by censoring the internet or turning the internet off. And that is an unlikely path, I think, in a pluralistic society that values freedom of expression, freedom of speech, and has also enshrined, at least in the US, that money is also freedom of expression and freedom of speech. And so, in long story short, there are now actually digital currencies that are what are called stable coins and are actually just fiat tokens of dollars or tokenized pounds or tokenized euros. So even if you are hardcore into loving your pounds and your euros and your dollars, you can actually get all of the features of digital currency, meaning instantly sendable over the internet, basically for free, transactional capabilities globally, and settlement with a high degree of certainty. And you get no volatility because you're using dollars, pounds, or euros. You can use stable coins, and those stable coins are actually settling and clearing on these public ledger blockchains. So there are now stable coins issued on the Bitcoin network. There are stable coins issued on the Ethereum protocol, on the Polkadot protocol, and on the Algorand protocol. And so, long story short, these technological systems are actually just gobbling up all forms of property rights, whether that's cash, assets, options, derivatives, equity. And people are using these global transactional networks to instantly settle and clear these property rights. And that is a huge change. And so, because that's already happened, I just think I don't think it's likely that the government any government would actually find a way to kill this without killing the internet. And in doing that, they'd be betraying, I would say, probably the most important growth engine that we have to bank our economies on for the future.
So you've just touched on something that is really important, which is about personal freedoms and governments' interventions. In China, I think I'm right in saying they are in the process of shutting down 90% of Bitcoin mining, and they are launching their own digital yuan. And it was if I get it right, it's Fanuzzi and Jin from the Center for a New American Security in Washington said it's not just a technical experiment, it's a giant leap for the Communist Party's control and influence in Chinese society. Now, Western governments, in creating maybe their own versions of digital currencies, are they not encroaching on individuals' freedoms as well?
I think it's a valid question. Observing what's happening in China, it's important to understand how concerning that really is. So, China has a very powerful economy, a growing military that is being significantly invested in, and probably the largest sovereign investment program in the history of the world via the Belt and Roads Initiative. Um, they have signaled an interest in developing a central bank digital currency, a CBDC. And what that would look like is them running their own centralized digital currency that allows them to totally surveil all economic activity within any sphere of influence that they have. So let's talk a little bit about what that might imply. But it would certainly imply that if you were performing activity that was not palpable to the Communist Party, that it could be shut down, it could be coerced, it could be uh, uh, stolen, the value, the wealth, all of that. You also have total optics into the national supply chain of all precious resources and retail and industrial use. So you're talking about a massive operation on a financial surveillance perspective. Um, the concerning part, I think, from a Western perspective, potentially, is that in the past, if we wanted to sanction activity because we were concerned about a geopolitical implication of some initiative, let's say expansion into Crimea or foreign direct investment in Africa, you could use the traditional financial system to put people on the Office of Foreign Asset Control list. You can sanction nations. You can prevent flow of funds via the traditional financial system. And in doing so, in combination with the patrolling of the oceans via a large naval capability, you can broadly keep lanes of commerce open, and you can set some of your own rules of economic activity. Regardless of where you stand on that, the new world is a bit different. If China decides it wants to sell, let's say, aircraft jets to, I don't know, Iran, and we go, well, they're a sanctioned nation, you shouldn't be able to do that. China will just say, well, Iran's paying in central bank digital currency, and they're going to use Dragon Coin to do so, and there's no way you can prevent that transaction from happening. And if two countries decide to use that currency to perform that trade, then that's it. The trade happens, and the United States loses its ability in cooperation with its allies to police that type of technology transfer. And so the Chinese have absolutely zero reason not to do this, which is why they're doing it. And so What is the response to that? Well, I think it's a really interesting one because now we have a real threat to dollar hegemony, and in alongside that, allied geopolitical response to expansion of adversarial activity. In response, I think the only answer is to build a better form of money. Build a better form of money and embrace innovation in a way that people voluntarily accept, adopt, and use it. And we have traditionally relied on our open model of mobility and freedom of expression and freedom of religion to attract and retain the world's most capable and talented people and allow human expression and creativity to flourish, which creates better outcomes. And I think that is still the type of society that I want to live in and invest in. And I think that digital currencies, ones that are permissionless, ones that don't care about the circumstances of your birth, they put everybody on the same starting line, at least to begin with, are a really powerful tool for human freedom. And I am excited about basically using those tools to build a world that enables more human freedom. So, in short, when we try and grip too hard, or we try and regulate too much, or we try and clamp down human freedoms, we tend to have very, very sad, very adverse outcomes. And so I think the best way to fight a closed system is to embrace the things that one historically have made us more powerful, but are also just the right thing to do for humans.
So that is, I think, very well expressed. But the related point, I was talking to a friend of mine called Rob Rooney, who's a very senior figure at Morgan Stanley, and he said that for essentially for 95% plus of the 7 billion people on this planet who don't care or have the luxury to debate the evils of fiat currency, they want to live their lives, have jobs, buy stuff. But for that, they want trusted central authorities. And how do you reconcile the need for trusted central authorities with the proliferation of these digital currencies?
Well, in some ways, these digital currencies are a response to those trusted central authorities, but in the opposite way, which is we're not sure we can trust them. We can't trust them not to debase our currencies. We're not sure if they're actually capable of managing our policy responses to modern threats. These modern threats require global coordination, global cooperation on everything from climate change to national security issues, to combating terrorism, to combating radical ideology. And if as a heir myself to an economy that basically put me into a workforce that was very crippled in 2008. I'm 36 years old, and so far, we've had two hugely calamitous economic events just in the first 15 years of my career. And I'm not complaining in comparison to other historical tragedies, but I'm making the point that it's not clear to me that our institutions are actually doing an extraordinary job in managing that sacred trust that we place in them. And so, we, Simon, have accepted in our Western democratic societies that there's a good reason to separate church from state. So that if you decide you want to worship God, you should be able to do so. And if I decide I want to worship some other religion, that's acceptable and it should be tolerable, and we should respect each other's freedom to do so. We also have freedom of assembly and freedom of speech so that we can discuss controversial ideas. If I want to go maybe seek advisement from a mental health professional, I should be able to do that. I should be able to pay that mental health professional for that advisement and not have to worry about, my Facebook feed being filled with self-help books and don't kill yourself guides the next day, because that transaction relies on privacy. And I think it's reasonable that in the modern and new era that we really embrace digital privacy, and especially financial privacy in an era where the separation of speech from state we've recognized to be valuable. We've recognized the importance of religion from state, and maybe it's important to recognize the separation of money from state. If the state continues to constantly increase the total supply of money and fund whatever the zeitgeist is for the current political party, whether that's in the United States, funding large infrastructure bills, funding large invasions in the Middle East, or large walls in the southern border. These things are easy to sell potentially politically, but disastrous to finance economically. And so I would argue we continue to witness in the long term like centralized systems basically corrupting themselves, and that to me is a severe threat to human prosperity. And so decentralized systems basically are all about trustless coordination, and basically people participate in them without any coercion, and it's just voluntary transacting. So if you and I want to engage in business, we should be able to do so in a peaceful way and use systems of technological transfer that enable us to do so. Now, I do think that there are very good reasons why we have organized our world with political power and religious power and other things, and all these things need to be sort of managed in a marketplace of ideas, and enabling that the marketplace of ideas to compete is really one of the beautiful things that we embrace.
So, the elephant in the room before we leave crypto and blockchain is that Bitcoin specifically doesn't come out of nowhere. It's mined. It's mined by solving large, complex mathematical equations, and the computers that solve them need large amounts of electricity. We're in a world where the sensitivity about climate impact is obviously growing. Is it just Bitcoin for whom that is a real problem, or is this a much bigger problem?
Yeah. So today, the Bitcoin network consumes an extraordinary amount of energy to run a computational network known as the blockchain. In order to maintain that, these Bitcoin nodes basically run constantly to keep a copy of the network updated. Now, it's been a very valid criticism brought by both institutions and more recently the environmental social governance requirements of institutions to study this very carefully. It's a very valid criticism of Bitcoin specifically. Now, there's two or three things to understand about this. One, almost all of the Bitcoin mining is now moving into jurisdictions with very low energy and renewable energy environments. And this is because if you want to operate a high margin mining operation, you want to have very low cost of energy. And so, ironically, even though it is consuming a lot of energy, it is actually financing some of the largest renewable energy investments in the world today. So we have this interesting dynamic where even though it is consuming a lot of energy, it's actually driving investment in renewables in the first place. However, if you don't like this and you think that the energy consumption is concerning to you, that's okay. There are cryptocurrencies that do not mine energy the way Bitcoin does. So there's proof of work systems, and then there's proof of stake systems. The Ethereum protocol is currently undergoing a major upgrade to switch over to a proof of stake system. These require far less energy consumption, and it's quite likely that many of these alternative energy consumptive cryptocurrencies will inspire innovation and investment from some of these ESG mandates because of their designs. So, long story short, you can align your personal values with digital assets and digital currencies that fit your worldview. Bitcoin is digital gold. Gold, by the way, also terrible for the environment, requires strip mining, complicated, industrial processes, and dangerous chemicals to extract out of the Earth's crust. Bitcoin is frequently referred to as digital gold. It requires a lot of energy too. If you don't like either of those, that's okay. But there's some reasons why energy being transferred and stored as a store of value into something also has economic value.
Three cryptocurrencies on a 10-year view, which would you own?
Oh, well, I should preface this by saying I'm not allowed to provide investment advice, and people should do their own research. But there's a good reason why Bitcoin has been successful, and and the reason why it has so much market share today. Um, it has been battle tested, and it is extraordinarily resilient to a variety of different attack surfaces. And it's also proven out to be quite useful in the era of the economy shifting into a digitally first economic coordination system. So I like Bitcoin still. I like Ethereum a lot. I think there's an enormous community of very clever programmers, developers, and entrepreneurs that are thinking really way further afield in terms of how we can build resilient computer systems and agreements that actually run software in a distributed way. So imagine a social network again that rewards its content creators. Imagine agreements that are vastly more complicated, taking in variables and then executing agreements. You could run distributed autonomous organizations, aka corporations, over one of these networks. So the Ethereum protocol is particularly cool. And then there are these what we would describe as sort of intermediary protocols that sort of live between these. Protocols like Polkadot are pretty interesting. So again, I would highly advise anyone who's interested in these capabilities to listen to podcasts like Simon, do some your own research, read the investment theses from places like ARK Invest. They are doing some really good research on these different asset classes, and then have a long-term view. I don't think a lot of the playing field will be determined in the next year. This is going to take a while to bake in, and we're on a long-term journey of transitioning our financial system into one that matches, a digitally native world.
You were involved in a charity called Sky's the Limit, which I believe is helping digital mentoring. Tell me a little bit about what you're doing there.
Yeah, thanks for asking about that. So besides trying to help anyone in the world better have access to managing their wealth by building software that helps them send, receive, secure, trade, and exchange their money, I also care a lot about entrepreneurship. And in 2014, I started a charitable organization called skysthelimit.org. And we focus first by helping entrepreneurs get mentorship and advisement. And I think if you talk to almost any entrepreneur or even many professionals, navigating your life, your career, or your business requires a tribe. And you need to have people that can help lift you up, that can help you see your blind spots, and be a good board of advisors to you as you mature through your story arc. And so we built skyslimit.org as essentially an online venue where first-time entrepreneurs can safely practice building businesses. And we focus specifically on helping underrepresented entrepreneurs. So we've had 45,000 people sign up. 80% are people of color, 70% are women, and 58% are Black women. Now, most of the entrepreneurs we work with have never started a business before. So they may be thinking, how do I use the things I have around me to practice building my first business? That might be maybe running a small catering company out of their kitchen, or building a clothing line, or starting maybe a hair salon or something like that. Now, all these small businesses need to become sort of tooled with digital capabilities, whether that's having a website or learning how to do influencer marketing, and those types of things. So at skyslimit.org, they can sign up. We match them with volunteers that we're always recruiting. So I'm sure there would be plenty of fantastic potential candidates to help support these young entrepreneurs that are listening to the podcast today. All of you hold significant amounts of social capital, and we got that social capital primarily through the circumstances of our birth. We were lucky. We went to school, we went to business schools, we worked in great companies, and we learned a lot about how to conduct business. I think that by transferring some of that social capital from those that have it to those that need it, we can build a more diverse, more resilient, and greater ecology of wealth creators. And that's super important. The economy today is incredibly fragile. The pandemic and the lockdowns crushed small businesses, especially. We're going to have to phoenix new types of businesses, new types of companies that can clothe and feed us. And we also need to help people practice. It, on average, takes entrepreneurs 7 times to try and fail before they get a business that runs. That is okay. But you have to start somewhere. And so it's skyslimit.org. You can sign up, it's free. We have mentorship and advisement, a pathway to business ownership, which is a curriculum. And we also offer grants to entrepreneurs anywhere in the world. And we just recently launched in the UK, which I'm extremely proud of. So we now have reciprocity between the US and the UK as an international non governmental organization.
Oh, well done you. We'll be including in the show release the links to that as well for people who want to know more about it. You sent me an article on capital cities, and you've just opened a new office in London. Post Brexit, there's been lots of talk about London's demise. I don't happen to subscribe to that, but why did you vote for London, and what do you think is going on?
Yeah, so look, London has been a home for financial innovation and business innovation for thousands of years. And there are a couple advantages that the UK has, regardless of the historical turbulence and political turbulence of the past few years. Look, it's an incredible time zone. The language that is spoken here, the National Health Service, as a defense against pandemic risks, is actually a significant asset to the country. And then also, you have a property rights system and a rule of law that is baked in, that is incorruptible in many ways. And so I think you've got a very strong, sort of core set of variables that make the UK a great place to build companies still. At the end of the day, in the digital context, we're going to be expanding globally. We've also announced an opening of a U.S. headquarters in Miami. We're very excited about serving, North America from that venue. Gives us access to Latin America as well as North America in a very great time zone. I think the big cities of yesteryear, though, do need to be competitive in attracting talent and making sure that those jurisdictions are the best place for entrepreneurs to come to create great companies and share that wealth with their shareholders, their employees, and their communities. And so, in the long term, I'm also bullish for the UK. I think it needs to navigate this transition out of the EU and make sure that it's the best place in Europe for entrepreneurs to build companies. And if they do that, the talent will come. And the other thing that's important about the UK really is its commitment to providing a national health service. This is a big deal in the era of pandemics. The rollout of the vaccine in the UK has far exceeded those of other industrialized Western nations. If the country can stay healthy, it can get back to work, it can cooperate, people can convene, you can get creative, and you can build great tools and services. So that's my little pitch for the UK as well. But I'm not as doom and gloom as other folks, but I do think the composition of what a company kind of looks like and its sort of needs has changed. Makes more sense to me to invest in high speed internet than building open floor business plans. And so, even though there's a lot of open commercial real estate in London today, there's also a lot of need for access to affordable home and affordable home ownership in London, and we can navigate adjusting the composition of the real estate portfolios.
So, Nick, you're meeting some very interesting people, particularly those who have invested in your companies who go along the way. Who haven't you met yet that you'd really like to talk to?
Oh man, Simon, that's a great question. I have been very lucky to meet a significant number of idols of business leaders that I respected, and also contemporaries and colleagues over my career so far. So I, you know, I get a lot of joy of meeting the young people that are, building companies in this space that have the energy and ambition to do the next big thing. I'm not looking so much at existing role models anymore, and I'm more looking at the young adults that see things in a way that it's kind of hard to explain, but like you've got some children today, you watch them interface with new tools, and they adopt things so quickly, and it's inspirational to me to spend time with young entrepreneurs that are cutting through what took me decades to figure out. They're picking up so much faster. And so I met with a young entrepreneur 2 weeks ago that had an idea for building essentially a social financial system. And I'd never thought about how something like that could work before. And I thought that was pretty inspirational.
Nick, you're very busy, you're doing lots of things. When you are not doing those things, what's your perfect day?
So my perfect day would be waking up, watching the sunrise, having a nice cup of coffee. I'm somewhere out in the wilderness. I get up and fish. I love fly fishing. That's a personal hobby and passion of mine. I'd have my closest friends and family members around, my two dogs,
and we'd probably be camping. And yeah, at the end of the day, we'd tell stories uh, and watch the stars and have a nice evening. That would probably be my perfect day. Um, so
Well, I'm going to introduce you to Robert Smith, who was our podcast guest a couple of weeks ago, who runs Vista Equity Partners, because he loves to fly fish. So there you go.
no,
There's
that'd be
always something coming out of this show. Um,
actually, I've got my fly fishing hat right here with one of my little flies, so just in case.
Fantastic. Well, I as I thought about this whole area, I sort of wrote down three things, and I'm going to have to reflect on them afterwards. But one is what we do have in blockchain is a technology that changes information recording and sharing in ways known and probably not yet known, but it's very powerful. Number two is that what we don't have through cryptos is a collection of currencies in the properly or maybe previously understood classification of currencies that can be used for easy exchange and convertibility. And what we might have is an emerging store of value in the digital real asset space. But I'm an old time value investor, and that's dangerous. So, first of all, I'm going to let our audience think, decide, and listen. But, Nic, the final words are yours.
I think your summary of those is probably accurate. Although I've crystallized those, and I don't see them so much as an unknown as so much as I think they've actually come to fruition. So depending on where you are with that historical perspective, we're coming at it actually relatively in synchronicity. So important takeaways. Humans have been improving money since the dawn of time. Like I mentioned, we tried seashells, we tried feathers, we tried gold coins, we tried fiat money. And in the era where the world is becoming increasingly digital, it seems that potentially digital currency or cryptocurrencies that rely on digitally native characteristics could be the next evolution of money. That evolution would borrow from previously useful and valuable concepts that we can relate to, whether that's gold and the properties that it possesses, marrying those with cash capabilities, and then giving them digital features so that we can do all the things we need to in the era of the internet. Sort of story one. Story two is, are there emergent forms of money that are different than our historical analogies for them? And I think that is true. Our understanding of value is changing a lot. So are the types of things that people want to do with their time. If you were to survey young adults in the 1940s or 50s and you asked them what they wanted to do in their careers, you heard things like be a doctor, be a banker, be a teacher. If you look at what they want to do now, it's a little different. They want to be a podcaster, a vlogger, or a influencer. And so, Simon, you're leading the charge here. Um, and so, how they get their wealth and interpret their understanding of value, whether that's through followers or the amount of attention that they can gather, and driving that attention into different topics, super interesting. And the last piece is, you know, I think we have a duty to reimagine the world and hopefully make it a better place than the one we inherited. And so that's constantly challenging our assumptions about what's best and how to make it a little bit better. And so, I love the work I get to do with my colleagues on a day-to-day basis, and it's super interesting. It's drawing talent from all of the best firms in the world. And small plug for the company. We now have more open roles at blockchain.com than at any point in the company's history. And so, if anything that I described today sounded interesting, we are looking for people to help us shape these outcomes and ultimately leave this world in a better state than we inherited it. So, I know. Thank you very much for your time and the opportunity to talk about what we're seeing happen in the digital currency space. The summary is, we now have a technological capability that allows us to record a state of any type of transactional history and keep that state in a state of perpetuity. And so you have an immutable record keeping system, a digital property rights fabric, and a global transactional system all baked into one network. And all those things now are being more and more adopted by people. And when things are useful and they have general scarcity applied to them, They command market prices, and thus you have things like Bitcoin and Ethereum and a variety of other digital currencies.
Thank you. This has been a terrific, detailed, long conversation, and I'm sure many of our listeners, a lot of our listeners, will find it very enlightening because we're at the foothills of a big transition. So thank you so much for being with me today.
Thank you, Simon.